All right, good evening once again. Thank you for joining me tonight's section. So tonight's section, still on market structure, we're going to be talking about downtrend, also known as the bearish markets. So last week we talked about uptrend and we gave a few examples, but tonight we're on downtrend. Okay, so just like we established the fact that there are certain parameters you have to look at to know if the market is said to be in an uptrend or downtrend. So for example, you see the market coming down this way. Now, just by simple logic, if you look at this market or this structure, you can already see that the price is falling downwards. You know, just by simple logic, knowing that, okay, this seems to be coming down. All right. So that's a layman's way of just looking at the trend or looking at the market. You can just see if it's going up or it's coming down. But that's not enough reason to say the market is uptrend or downtrend. But by just an oversight, for example, let me show you the live market now. This is a 5 minutes chart on GBP USD. As you can see, from this point here, you can see that the price just keeps falling down. Okay, so from just an overview, you can say this is a downtrend. All right. Now, if you look forward or backwards again, just from this point here, this blue line, looking at how price just started moving up, you can say this is an uptrend and then this is a downtrend. Okay, so it's that easy. You can just look at the market and infer that, okay, this is an uptrend or a downtrend. But now, this is how we need to be able to label it properly so that you can best, niche down your insight into knowing an uptrend and a downtrend. No, so now I'll just start with drawing the tools again, like we explained last week. So we said when the market is coming down and it stops and it's coming up again, and then it stops. Now, you cannot tell what direction the market is going. If it's a downtrend, let's say you open your chart, okay? You want to trade the current market, not what has happened before. You want to trade the current market. You don't know if the current market is an uptrend or a downtrend. Now you have to watch for a while, okay? So let's say the market started from that point I just mentioned, it came down and it's coming up. What you want to see before you can say this is a downtrend, what you want to see is that you want to see that price, excuse me, my network, you want to see that price from this point moves below this previous low, this previous point here. You want to see price come and close below it. Once price close below it, you want to see price come back again, and it should not go above the previous high that was established. You want to see it also close below this particular high here, and you want to see it come down again and also close above this. So once you see these parameters happening, excuse me, once you see this pattern, you see this is a pattern. Once you see this pattern, this already tells you that, oh, this is what is a downtrend. How is it a downtrend? When price was coming from this level, please watch. When price was coming from this level down here, when it went up, when the price went up, and when the price started coming back down, it closed below this point here. This point here. As long as price closed below this, all right, yes. So when price was coming and price closed below this point here, you're already telling yourself that, okay, this is a downtrend that is being formed now. Now, to further confirm it, you now notice that price, after closing below this particular low here, you now notice that price started moving up again. And as price is coming back up, it does not come to close above this particular most recent high that was here. If price comes and close above this high, then we can't really say a downtrend has been established. But if price refuses to close above this particular high, and it stops anywhere in between, but it should not close above this high. Once it, let's say it stops here and it start coming back down again, and it closes, remember, it closes below the most recent low. That's the key word. Price must close below the most recent low for we to consider it that, okay, this is now a downtrend that is being established. In other words, can you see that this low was broken? This low, price closed below this low. So once price closed below this particular low, we can therefore say that, oh, a downtrend is being established here. And remember what I just said. This particular high you see here, do you see that price did not come up to close below it, or close above it rather? So that is a safe zone to tell you that, okay, this is a downtrend that is being established. All right. So now, how do we label this? When price, I'm going to draw it again. When price is coming down, for example, and it stops, it's going back up again, and it stops. Okay. Now, when price is coming here and it stops here, this particular zone here, because it's a low, because it is a low, this becomes a higher low. Or sorry, a lower. This is a low. This is lower now. This becomes a lower low. It is higher low that we talked about in uptrend. Sorry, this becomes a lower low, and we can label it as, excuse me, we can label it as LL, lower low. Why is it a lower low? Because this low is lower than this previous low. We are assuming that price is coming from a particular place. Okay. Now remember, I just said that for us to consider this particular trend a downtrend, this price must, as it's coming down, must do what? It must close below this low I just said. Now this lower low, price must close below this lower low. If price stops here and start doing like this, we don't know what the trend is saying now. But for us to confirm that this is a lower low, or this is a downtrend rather, the price must at least, even though it's going to dance around, but it must come to close below this lower low. Anywhere below the lower low. Once it closes below the lower low, then what you can do is to label the zone that pushed price down. Okay, in this case, this becomes a lower high. Oops, where is this now? Okay, this becomes, I would have labeled here the lower high. Honestly, in all honesty, I would label here the lower high. Now, okay, let me not make it too complex. Okay, let's say as price was coming back down, it closes below this particular low. Okay, so when price closes, that is when we can establish that this zone is now a lower high. Why is it a lower high? It is a lower high because this high is lower than this previous high. This is a lower low because this low is lower than the previous low that was coming from this trend before. Let's continue. You are going to see what I mean. So let's assume the price went up again. Okay, and it didn't close below, or it didn't close above this lower high. Remember, it must follow this pattern. If it closes above this, then this is not a downtrend that has been established. So price must not close above the recent lower high. It should close below it. So in this case, let's say price stops here and it came down again. Remember, I said for us to say that this is a lower high, price should close below the most recent lower low. Price should close below the most recent lower low. Price should not close here. If it closes here, then we can't call this place a lower high. Price should not close below this particular most recent lower low. So once price closes here, then we can label, we can now go ahead and label, let me clone this. We can now go ahead and label this particular place a lower high. And then we can go ahead and label this particular place as a lower low. Why is this place a lower low? Because if you check, this low is lower than this. It's just like something is falling. Can you see? This is like a falling knife. This is falling. This particular place is lower than this particular place. So that is why here it's called a lower low. You see the low that is lower than this particular low. Okay. Meanwhile, this particular high, you can see this high, this particular place is higher than this, right? So that is why this place is called a lower high. This next place is called a lower high. Why? It is lower than this previous high. As you can see, that is why we call it a lower high. Okay. So if we move to, for example, remember what I said last week? I said one way you can start to be able to at least identify your market is to go to line charts, make it line charts. You see, line charts is similar to what I just drew here. Of course, the market will not be picture perfect like this, okay? Do you get it? It won't be picture perfect like this, but you need your brain to be able to assimilate them like this, all right? So when you look at the line chart, what do you see? You can see what I just explained now. Huh? Let's look anywhere you are looking at. Do you see this? Let me show you where I'm trying to draw my structure from now. Let's say I'm drawing my structure from this point that I just drew my arrow. Okay, so it's similar to what I drew. Price is coming down and it stops here. Okay, so you can call this what? A lower low. All right, and then as price is going up, do you see these little structures? Fine, you can label them if you like, but then if we are using one straight line, as this comes up, this becomes a lower what? A lower high. Let me find something to be drawing as well. Okay, so the price is coming from this point here. I'm coming, let me label, let me draw, let me make this black. Let me thicken it a bit. So, good. So you can see where I'm drawing from. So let's say price is coming from this arrow point down to this point here. Okay, so we can label this particular point here as the lower low. And when price is going up, you see it stopped here. Do you see? It didn't go up and closed above this particular point. So we can say that this is what? A lower high. Why is it a lower high? Because price went down again and closed below. Do you see now? Price closed below this particular zone here. You see? You see what I just showed you? See? You see? Price closed below it. You see? As price closed below it, we can then label here a lower low. Here becomes a lower high. You see, when price came close below it, price came back up again. And price did not close above this zone we just labeled as the lower high. You see what I just explained here? You see? So as price did not close above this particular lower high, it came down again. And then we can label here as the lower high and here as the lower low. And you can see price gave that pattern. You see the pattern? So as price is giving you this pattern, you can be sure that, oh, this is already a downtrend. Okay? So this is where we'll be ending our class tonight. As we said, we don't want the sessions to be so long. So tomorrow, same time on the same Zoom link, we'll go into another phase of market, but there will be time and there will be room for questions. So what you can do is to try and go to charts or draw these patterns on your notebook so that it sticks to you. You know, you can get familiar with the pattern. It may not be picture perfect like this on the chart. Of course, if you look at the candle pattern, you might be wondering, okay, to what extent do I say this is lower low or lower high? Okay, but it is also very important for you to know this is how it forms. so that when we are using candle, when we are using the candle to be showing you the regions you can be using as lower low and lower high, because you already have the mental picture of how it should form, it's going to help you make better decisions. Okay, so thank you for joining in tonight. Thank you. We'll be stopping the call now. Do have a wonderful night rest. Remember, tomorrow, same time, 8 p.m., same Zoom link for another wonderful session.